back here with Money, Money, Money. Mark your financial calendar for the 29th of February. That's when Finance Minister Arun Jaitley will be presenting the union budget. For you and me, the one thing that matters the most is direct taxes. And we saw some relief last year, but the salary deductions were left pretty much unchanged. So is there scope for some tinkering this time around? What other tricks could the Finance Minister have up his sleeve? These are all the questions that we'll be posing to our guest, Anil Chopra, Group CEO and Director, Bajaj Capital. Mr. Chopra, last year we had several headlines come out for, personal finance, for individual salary taxpayers. Are you expecting anything this time?
Well, despite, whatever announcements were made last year, the minimum exemption limit was still left unchanged at 2.5 lakhs, whereas there was expectation for that to go up to 3 lakhs. So that is one big question, whether this time the finance minister would be accommodating and letting it go up to 3 lakhs, which would mean that relief of about 5,000 rupees to every taxpayer. And there are 5 crore taxpayers, so which means 25,000 crores of letting the income go, which is a tough call for finance minister. But that is one of the expectations, that the minimum exemption limit should go up from 2.5 lakhs to 3 lakhs. Apart from that, there is a strong need to encourage investments in equity markets and in capital markets. So this Section 80C limit has been at 1.5 lakhs for a few years now. So there is an expectation that this should go up to 2.5 lakhs. And also there should be clear demarcations between capital growth, which is wealth creation in long term, protection needs and regular income needs.
So I don't know if the actual quantum of deductions will go up or not, given the government's restraint to purse strings, and we know how things like divestment and all haven't really taken off this time around. So we know those constraints. But let's talk a bit more about the regime that you're talking about, that you're hoping for or expecting. Are there any additional instruments that you'd like to see get added to the 80C kitty, or any kind of major overhaul in terms of categories?
Yes, there are two things that we are expecting. One is a resig within 1.5 lakhs. Now 1.5 lakhs, Section 80C has several instruments like we have been discussing. It also includes post office time deposit. It also includes 5-year deposit with certain organizations, and also includes things like tuition fees, which needs to be taken out of the system. On the other hand, we would also expect finance minister to ensure that this 1.5 lakhs is broken into 3 subcategories, so that all categories, all goals are taken care of. We would expect 50,000 rupees to be earmarked for equity-linked saving schemes, so that there are individuals, they put entire 1.5 lakhs into PPF and they say that we have done our Section 80C. But I'm afraid they haven't done proper planning.
The tax-free bonds that we've seen this year, and some of the issues are already out, how do you rate them? Are these good instruments that one can look at? And how would having infrastructure bonds be announced be more of a boon, especially for the salaried class?
Well, you see, as far as tax-free bonds are concerned, they are suitable only for high net worth individuals, so-called the rich people, or celebrities or industrialists and all. So they are not good. They are not considered very good for retail investors, because the returns are only about 7.4%, 7.3%. Okay. So if they're not even beating the inflation. But for somebody who has amassed huge wealth, they would rather like to park their money in these tax-free bonds for long and not pay any tax on it.
And the sum invested does not get any deduction.
No,
tax-free
it doesn't get any deduction. Yeah, no. So if we replace this by introducing the infrastructure bonds for retail categories, like we had for 2 consecutive years, 11, 12 and 12, 13 in the earlier government, that would give additional tax incentive to millions of people, those who are in 10% or 20% tax bracket, and also the middle class people. Plus, the government would be able to garner the funds required for meeting some of these infrastructure funds requirement for companies like NHAI or IRFC or PFC, etc. So it would serve the dual purpose. So that is also another expectation.
If I recall correctly, when these bonds were introduced a few years back, I think the additional sum was 20,000 over
right.
and above the 80C.
Yes, we are expecting that to be 30,000 or 50,000, depending upon how much leeway or legroom the finance minister has when it does its math or when it does its budget.
So, and once again, on these instruments, in case these infrastructure bonds are reintroduced, what is the taxation structure that you expect it to be followed? I mean, will it be exempt, or
It can't be exempt. It will have to be exempt, tax exempt, which is ET, which means when you are investing, you are getting deduction. The interest on that you are paying tax, and in the end, when you get your money back, then of course there should not be any tax on that.
All right, Mr. Chopra, great talking to you. Thank you so much for taking out the time today.
Thank you, same here. Thank you.
All right, time for a quick break. Still up ahead is our tip of the week. Stay tuned for that.